Throw it back at you, sir, man. I just want to say, man, you are the most hardworking individual I have ever met, man. You putting a lot of stuff together this week and the previous weeks, all the videos you're throwing out, like you're just such an inspirational man. I never thought I met the day that somebody would overwork me, man. You doing your thing out there, brother. Just want to throw that love right back at you, man. Ladies and gentlemen, my name is Jason Torado. Like um, our leader said, T. Smith, I have been in this industry for a little over 6 months, but I also have been doing a lot of logistics over my 15, 20 years in the workforce. So this is kind of like second nature to me. Um, I was in it from day one, been learning and educating myself and following other mentors and along the way. And I'm telling you, this is something that I just fell in love with right away. This falls right into the category of what I like to do for a living. Okay. I mean, I freed up my time. I quit my job. I'm doing this full time. It's just a wonderful feeling to have my time back. Period. Just so wonderful to have my time back and able to take that extra 8 to 7 hours that I would have been at work and spending it with my son. Just plain and simple. And been doing a lot of one-on-one sessions, doing a lot of training with everybody else because I really believe that everybody can do this. Okay, it just takes time and patience, and really, really plugging in is the number one thing that you have to do is just plugging in. Um, Anytime there's a Zoom, a meeting, whatever, plug in. That is the number one key thing that I'm going to give you today. So write that down. Plug in every day. All right. So what we decided to do this, we were going to do back to the basics. All right. What I'm going to talk about tonight, all right, it's going to be identifying a trend, calculating pips, and the head and shoulder pattern. Okay. Some of the things that we trade. All right. So I'm going to get right into it. If you guys can see my screen, if not, just make a comment on the chat box and I'll try to fix that. I've been having some technical issues here. Okay. All right. Here we go. So I want to leave you guys with this quote. Okay. I've had this quote saved and written down on a couple of my notepads. And it's very simple, but very true. Okay. As you start your trading career, your trading journey, however you want to label it, you need to learn how to discipline yourself. And this is a very great quote that I want to start off our conversation with. The key to trading success is emotional discipline. If intelligence were the key, there would be a lot more people making money trading. Okay, and that's by Victor Sperandio, and I follow him a couple of times. But this guy right here, this quote right here is very true. And some of the people that are already trading with me and some of my students, you can get very emotional and lose trades or miss a trade. You have to keep discipline in your emotions and trust your trades. All right. So one of the things I'm going to talk about is the trend. Okay, how does the market move? All right. There are The market moves in three directions. Okay, in three directions the market moves. The market moves what we call an uptrend. The market moves what we call a downtrend, and the market moves also what is called consolidation. Okay, and these are the three ways that the market moves. We don't go left, we go right all the time. We either go up, down, or sideways is what we call it, or in consolidation. All right. So the definition of an uptrend, if I'm going a little too fast, just let me know. But I'll slow it down a little bit here. So what is an uptrend? Okay. An uptrend, or which is also called a bull market, but we all mostly know it as an uptrend, is when the market moves upward, making higher highs and higher lows. Okay. Now you're thinking to yourself, well, I don't even know what the market is. Well, the market is like the stock market. Forex is the same thing. It's a market. It has candles like you have here in this picture. Uh, if you see a green candle, we call those candlesticks. That means that the market is moving up. Okay. If you see red candlesticks, that means the market is going down. All right. So a uptrend is when we see the market going up in a upward momentum, making higher highs and higher lows. So for example, right here, we have a low, okay? Right there at the bottom, that is a low. And as the market moved up, it created a high, all right? Now the market, as you see, came back down on that nice long red candle, but it did not pass that previous low where the word says low. So that is considered a higher low, okay? It's a low point, but it's higher from the previous low, giving us an indication that this market is moving in an upward momentum. Okay. And we need to know these things because as a trader, we need to know how to position ourselves to get into the trade and to get out of the trade. And and defining what the market is doing, okay, if it's on an uptrend or a downtrend or in consolidation, those are the things that we really have to know in order for us to be profitable in this market. So as you can see, we're in a higher low, and you can see the market continue to move up with green candles creating a higher high. All right. And you can see it swung back down right there, creating a higher low. And we call that another higher low because it's higher than that previous low. Okay. And the market shot back up, creating another higher high. So that's how you define a uptrend in the market, okay, in order for you to determine what the market is doing, in order for you to get yourself in a position to trade, all right? So that's what an uptrend is, creating higher highs and higher lows, okay? So the definition of a downtrend, what is a downtrend? Okay, well, it's actually the opposite of an uptrend, obviously, is when the market is going down, okay? Um, a downtrend, or what we also call a bear market, but mostly known as a downtrend, is when the market, got something on my screen here, is when the market moves downward, making lower lows and higher lows, okay? So what we do, we start at the top, okay? Here's a high, okay? At that point, the market was high, all right? And as the market moves low, it creates a low right there at that point, at that nice long red candle, that was a low point right there. Then the market moved back up, creating a higher low. And a higher low is still a high position from the low, but is actually supposed to be a higher low from the previous high. Okay. And then the market created a lower low. Okay, it's a lower spot from the previous low. All right. And as you can see, the market continue to create lower lows and higher lows throughout the downtrend here, okay? So those are two ways that the market moves, and we're about to get into the third way. But again, this is very important to understand when you're trading, is to know where the market is moving, which way is it trending, okay? We always say that the trend is our friend for a certain amount of time before it becomes our enemy. So the trend is our friend. All right. So identifying if the market is on an uptrend and identifying the market is on a downtrend. Okay. And the next way that the market moves is what we call consolidation. All right. Consolidation is when the market moves in the sideways motion. All right. It doesn't make any higher highs and it doesn't make any lows. All right. Is what we call trapped on price. Okay, the market is trapped on a price that it can't clear. It's not able to go up higher than that level of price. And then at the bottom, okay, as you see that whole box right there, you can see how the market moves up and it's hitting the top of that black line on the box, but it's not clearing it. You can see how it's just doing its best to chip away, but it didn't clear just yet. Okay. And at the bottom is doing the same thing. It's coming back down, but it is not breaking that level of of support, is what we call support. So the market is hitting resistance at the top, okay? And then it's hitting support at the bottom. That's what we call a consolidation. It's moving sideways. It's not doing anything. It's really a buildup to which way the market is going to go. And then eventually you can see the market exploded on the uptrend at that point. That green candle broke out of that box, and it caused that momentum shift to come all the way up through to the top. Okay. Okay. Please make sure you mute your lines, please. So it's also known as a market indecisiveness. So it doesn't know which way it wants to go. The market makers are just sitting there, just building up these orders and then eventually taking off going one way. All right. So one of the things that we have to do as a trader, okay, is market analysis. Okay, we have to do market chart markups. Okay, in order for us to understand where we're going to get in on the trade, we need to do an analysis. Okay, so how to mark an uptrend? How do you know, besides creating higher highs and higher lows, that you really are on an uptrend? Okay. And to mark an uptrend, you need to use what we call a trend line. And these tools are provided to you when we do when we go into the market, when we go into the charts later on. After this presentation, we'll go into the live charts and I'll show you how to mark these trend lines, okay? So to use a trend line, we mark the low of the trend line to the high of the trend, all right? Just like that, okay? We put a line on the bottom. When we see an uptrend creating higher highs and higher lows, we take a trend line and we mark the price at the bottom, okay, right there where the line begins on the on that line that just drew up. There is a green candle. That's my starting point. And then I just take it and glide it all the way across until I hit a second point where the market came back down, and I just mark it right there. And you can see that the market is moving on an uptrend. That's also hitting, okay? That's also gives an indication that that trend line is also a support level, okay? That trend line is being respected, and that could actually be used as an indicator to get into the trade, okay? So if I was looking to get into this trade, to this market using a trend line, I would wait for the market to come right back down to that trend line, at least close enough, and then buy into the position and take the market upward. Okay, you can actually trade that way. You can trade using trend lines. All right. So as you can see there, the market is being supported by this trend line. All right. So how to mark a downtrend? Now, marking a downtrend is actually a little bit different. Okay, you don't put a line at the bottom, okay, to mark your downtrend. You put a line at the top. Okay. So as you can see there, I started this point at what we call a wick on the candle, at that very large top wick, and you can see how the market came down and then started to come back up just a little bit and hit the line again. All right. And that's called resistance. Okay, that trend line is being respected as resistance. And if I, as a trader, wanted to get in on this trade, all right, I would wait for the market to come back up, which, if you can see, when the market came back up towards the end, I would enter right there to sell. And you can see how the market just went down. So if I was to trade using trend lines, this is the way that I would do it, is to put a nice trend and wait for the market to come back up and test that trend line. And I would enter in that position. And I would, in this point, I would sell on the downtrend and I would take my profits. Okay. You can make money buying and selling in this, in the Forex market. Okay. All right. Trend reversal. What is a trend reversal? Well, as sometimes the market doesn't go on an uptrend forever. At some point, it's going to have to go the opposite way and go down, right? So in this example here, okay, let me put this up. What is a trend reversal? Okay, there are 3 phases to a trend reversal, all right? One is the price breaks the support or resistance of that trend. All right. So if there was a downtrend, then eventually that market is going to break the resistance, and then that resistance will turn support. All right. The price continues to move below or above the level of that support or resistance. Okay. And then the price starts to move in the opposite direction. So those are the three phases that cause a trend reversal. Okay. So if you look at the picture, there's my trend line. Okay. As you can see, this market is going down, right? The market is going down. So I have my trend line above marking these positions that the market is respecting. That trend line, as you can see, is getting hit. And then it actually broke through, but came back down, which is also called what we call a fake out. Okay. It pretended that it was going to break through. Okay. And if you were a beginner trader, you would have been like, oh, we're going to buy. And look what the market did. It would have took you out. Okay. So you need to also practice patience. Okay. So that market did a fake out, came back down, retested, and then it tanked all the way down, as you can see, to the bottom of the screen. Okay. So how do we know that this market did a trend reversal? Well, at the bottom of the screen, okay, you can see the market is starting to come up with more greenish large candles. And now we have a support line. Okay. Now, as that market moved up, you see it did a final retest of that downtrend trend line, of that resistance, and then it finally broke through and continued in the direction of an uptrend. So the downtrend is now completed. It's done. Now this market is in a uptrend. Okay. And that's why it's so important for us as traders to identify which way the market is going. Okay. In order for us to get into a position to either buy or sell. All right. Just basic, simple trading. Okay. So the next thing that we're going to talk about, okay, that's is counting pips. Okay. Now, what is a pip? All right. Well, a pip is the minimum tick that a currency pair moves on an uptrend or downtrend. Okay. It's also known as points in percentage. Okay. It's also a way for us to determine how much money we made, or if we're in a trade and we want to enter at a certain price, and if we want to exit a certain price, we count pips in order for us to get out of a trade, or to prevent a stop loss, to do a stop loss. We also use pips to count how many pips we want the market to stop us out. So pips is a percentage in interest. Okay, is a point of interest, and it depends on what currency you're trading. Okay, the value is not all the same when you're doing counting pips. All right. So for example, EUR USD. Okay, for those of you that are new, EUR, the first three letters, that is the euro. Okay, I'm sorry, one second here. It's the euro, and then the last three is the dollar, USD. Okay, US dollar. So this pair together is called EUR USD. All right, and in order for you to count the pips, okay, that highlighted red 4 is your pip. Okay. Oops, I'm sorry. There we go. Now, GBP JPY, okay, that is the British pound, GBP, against the Japanese yen, JPY. All right. Now, as you can see on EUR USD, the 4 is 4 from the decimal point. Okay, 4 positions from the decimal point, and that is our pip. But on GBP JPY, okay, after the decimal point, our pip is actually the second after the decimal. So it depends what pair are you trading for you to calculate your pips. And you need to be cautious of that, because you can miscalculate your pips and think that you're going to get 10, 20 pips when really you're getting 1 pip. Okay. So that's one thing that we need to understand is what pair and what point of the decimal place is this an actual pip, okay? So as you can see here, that's the pip. And for GBPY, that is the pip. So when that pip moves up one, okay, if you're doing a 0.01 lot size, and I'll talk about that here soon as well, then you've made a certain amount of money, okay? So that's the next thing I'm going to talk about is, well, what are lot sizes? I can't talk about counting pips without explaining what a lot size is, so that way you can understand, well, how do I make money? Okay, well, when you enter a trade, once you determine your entry point and things like that, and you did a market analysis, now you have to determine, okay, well, how much money and I'm willing to put up to make a profit. Okay, and we do is what we call lot sizes. Okay, what we use is what we call lot sizes. All right, so Forex is traded in amounts called lots. Okay, there are 3 amounts to trade. Okay, 3 different amounts to trade. And before I go on, it really depends how much you have in your broker's account to determine the size of your trade. Okay, so the first one is called the standard lot size. All right, this is what we call the big boy size. Okay, second is the macro size, and then the third is called the mini size. All right, so a standard, okay, is a 1.00, and that is equal to $10. All right, a mini is a 0.10 trade size, and that is 10 cents. I should have used the cent sign, but that's 10 cents. Okay, that's, and I'm going to combine this with pips, and you'll see. All right, so a micro is a 0.01, which is 1 cent. No, actually, that's wrong. I'm sorry. A mini is $1. I'm sorry. Yeah. So a standard is $10. A mini 0.01 should be $1, and a macro should be 10 cents. I'm sorry. That's all mixed up there. So a mini is $1, actually, $1, and a macro is 10 cents. Okay. So lots and pips. Okay. So to determine the amount of profit, the lot size and the amount of pips will need to be calculated. Okay. So here we go. For a standard lot, okay, 1 lot times 10 pips will make you $100. Okay, just 10 pips, and 10 pips can come real quick, like real quick. If you do your market analysis right, it can come quick. But as quick as it can come is as quick as it can go. All right. So a mini lot, all right, 0.10 times 10 is $10. All right. So every time the market moves 1 pip, you're making $1 from the mini lot. Okay. And then the micro lot is 0.01 size multiplied by 10 pips will give you $1. All right. So you would get 10 cents for every 1 pip the market moves. Okay. Now, the next thing that I'm going to talk about, okay, is the head and shoulder pattern. Okay. And I'm going to combine this with the uptrend and with the downtrend. All right. So the head and shoulder, all right, is really the most common, okay, if not the number one most common trend reversal patterns in the market. All right. And it is formed by the left shoulder, as you can see on the picture here. Then you have the head. Okay. The market comes back down, and then the right shoulder forms. Then that's why we call it the head and shoulder pattern. All right. So let me explain. So how do you find a head and shoulder pattern? Okay. So to find this pattern, okay, you must first find the trend. Okay. So tying into what I talked about earlier, depending how the market is moving will depend how you trade the market. All right. So you need to find out what your trend is. Okay. So we have an uptrend. All right. So let's say we have an uptrend. The market is moving up. Right. And what we do is we wait for a pullback. Okay. We wait for that market to pull back. Okay. And then when we find that pullback, what we do is we draw a line right there at the very top, at that point of where the market reversed back or pulled back, not reversed, pulled back. Okay. Then what the market will do is it'll go and make a higher high. Okay. Because we're on an uptrend. So it's making a higher high. Okay. And now the market is cleared that previous high and then came back down to what we call the neckline right here. Okay, that is called the neckline. And then when the market comes back up to that gray line from the left shoulder right there, we sell the market. That is where our entry is at to position ourselves to sell the market and make profit. Okay, now this one here is a regular head and shoulder pattern. Okay, now we have another pattern which is still a head and shoulders, but it's called the inverted. It's basically upside down. And I'll get into that on the excuse me, I'll get into that in the charts. Okay, so how does this look like, okay, on the chart? Okay, so can you show me on the chart? Sure. All right, so on this picture here, okay, this is a picture of the market. Now the head and shoulder is not going to look pretty all the time. It's not going to be a nice formation every single time. It's not going to be perfect. You have to train your eyes to see the head and shoulder pattern. And this one here, for the students that are on here, they know they can see it right now without me even putting up the markups. They can see it. Okay, so as the market moves up, okay, we wait for the pullback. So we were on an uptrend, okay, we wait for the pullback. Right there, the market pulled back, we draw a line, okay? The market shoots right back up and then comes back down, giving us the neckline. And then we wait for the market to come right back up, right to that gray line, as you can see, and that's where our entry sits. That's where we put our order before it even gets up there. That's where we put our order, okay? And then we sell the market, okay? We will position ourselves to sell, all right? So, well, I'm new to this. This is my first presentation. This is my first time hearing about the markets. How could I trade this without, with some help? Okay, don't worry about it. In the IML Academy, we have a system called Levels, created by one of the top educators in the IML Academy, Mr. Oren Wright. He created this system here to help us trade the head and shoulder patterns. Okay, so what is Levels? Levels is a program that helps you identify the head and shoulder pattern using Mondays as your starting point. Okay, as you can see here, Mondays are highlighted in boxes marking the day high and the market's day low. Okay, Monday is also the start of your left shoulder. This is very important information because if you don't get this, you can miss out on your trade or actually enter the trade in the wrong way. All right, so I'm going to show you through this example right here. Okay, so look at the picture right here. We're going to look at the green box at the bottom. Okay, the dark green box. Okay, that is our Monday. As you can see, the mark during that 24-hour period, okay, the market made a high. Actually, it started with a low. Okay, started with a low because remember, we moved from left to right. We never move left. It's left to right. So from the beginning, it went low from that red long candle and then it went up. Okay, and then it came back down. So it marked the low of that 24-hour period and the high of that 24-hour period. And what I do is I put a line at the high, then I put a line at the low. Okay, I'm going to box that thing up. Now, what I'm waiting for, my next position is I'm going to wait for which way the market is going to break out. Is it going to break out the high or is it going to break out the low? Okay. So as you can see here, the market broke up the high first. Okay. Broke out the high. Now I'm waiting for that market to come back down and give me 100% verification, confirmation of the neckline, because we need to have confirmation when you trade. You got to have confirmation of your trade. Okay. So I'm waiting for that market to come back down and give me my confirmation that it came back to the neckline, which is right there at the bottom of my Monday. Okay. Monday's low. Now I'm waiting for the market to come right back up. Okay. Because my entry point is going to be that Monday's high. Okay. Right there. My entry point is that Monday's high. Okay. I'm going to enter the market there. And yes, the market continued up, but it did not hit what we call a stop loss. Okay. And we'll explain that later. Okay. So it did not hit what we call a stop loss. So the market came right back down and gave me my profit all the way down to that orange low Monday right there. Sell. And I made profit. Very easy to use. You just have to wait for the market to break out. If it's going to break out the bottom, okay, then you wait for the market to retest the high, come back down, and then you buy the market. It's the opposite way, okay? So can we see it in real time? Unfortunately, no. But I'll do this one time for you guys. Let's go to the live charts. All right, here we go. This is levels, okay? If you guys can see my mouse and everything, good. If not, just comment on the box and I'll try to make adjustments there. Okay, so we're gonna go to a G pair, GBP, okay? I'm not gonna go to explaining what all this stuff is, okay? There's a video here, training, that explains how to use the level system, but I'm just gonna show you how to identify the head and shoulder pattern, okay? So, actually, let me go to this other pair here, GBP-USD. This is one that we actually traded today. Okay, we actually traded this pair today and actually made a profit. It's actually the one that I just talked about. As you can see, this red line right here, this is live. The market is moving. Okay, so right now it's on a, it's coming down just a little bit, but you can see this number will change. All right, so right now I'm on the GBP-USD chart. Okay, British pound against the US dollar. All right, so what am I looking for? Again, right, I'm gonna get my lines here. And this is what we do a chart markup. We're gonna mark up our chart. I'm gonna get that Monday's high. I'm gonna get that Monday's low. And what I'm waiting for is, like I said, I'm waiting to see which way the market is going to break out. And here's the great thing about this system. Let me just do this real quick. The great thing about this system is if you click rules, this system will tell you how to trade the market. It gives you the step-by-step instructions of how to trade this system. There's other ways to trade this system. I'm not going to get into those trades because they require some, you know, some training. But right here, okay, we wait for the market, right? If I follow my rules, which side of the Monday did the market break out from? This is our Monday. Well, the market broke out the top, just like so. Okay, the next rule, did the market retest 100% of the neckline? Yes, it did. The market came back down right here. That's my neckline, okay? Then the next rule, did the market complete the right shoulder? In other words, did the market come right back up right here and started the right shoulder? Yes, it did, okay? If all of this stuff qualifies, do the trade setup, okay? Stop loss is 50 pips, take profits is 25, and that's your lot size for every 100 in your account, okay? And what I did, I marked this up, and we took profit earlier today on this trade right here. Okay, if you guys on the group on the chat, if you guys got into this trade, man, drop some fire in the chat group, man, and let people know that you took profit on this trade, okay? Because this was a good one right here. Basic, back to the basics here. We use regular head and shoulder patterns, and we got profit on this one right here, okay? We took profit, all right? So the other, I'm gonna go to this other pair because this one I already showed you guys. I'm gonna go to this other pair, and I want you to really see that I could even trade it without waiting for the Monday's session, okay? So watch this. Right here, okay, I'm gonna zoom in right here, okay? Okay, here we go. The market went up right here, okay? Then the market came down right there. What do I need to do? I'm gonna draw a line right there. Then the market came all the way back up. Okay, we can even go to this point right here. Okay, came to the high and then came back down and gave us 100% right here. Okay, let's make that orange. This is our neckline right here. Okay, and then what do? The market came right back up right here, right? Because this is our entry right here. This is our entry. That's our entry. And look what the market did. It went down. So let me show you, okay, how we count the pips. Okay, this is our pip ruler right here. This is our entry and I'm selling. And this is GBP NZD. So right here, I'm going to go to the low. This market gave me, we're going to call that, we'll call that 40 pips just to round it up. Take away the 5, round that up, give us 40, right? So 40 pips, okay? This market gave us 40 pips, okay? Lower this just a little bit. Okay, 40 pips. And if you times that, okay, actually, let's do it the other way. If I did let's say I did a standard, okay, I got a nice big bank account in my broker's account, okay, that's my lot size, okay, multiply by 40 pips, it's equal to 400, okay, and so if I had a big lot size, multiply that by 40 pips, it's $400. Well, how fast did you make it? Well, each candle is 1 hour. So if I started here, all I waited was for 1, 2, 3, 4, 5 hours to make $400. Okay, 500 to make $400. If you have a smaller bank account or broker's account and you did a 0.10 lot size, okay, multiply that by 40 pips equals, okay, $40. You did a 0.01 lot size, multiply that by 40 pips, that equals, okay, $4. And I know some of you guys are thinking, well, that's no money. Well, when you start building your account, okay, from 100, 200 or whatever, and you continue to win trades and you're building that account, then eventually you'll start trading the 0.10, start making $40 a trade. And when you start building, okay, your account, your compounding is what we call it. We compound the account, start building it more and more and more. Then you start trading what we call the big boy size, the standard size. And then eventually you just start making $100, $200, $300, $400 in a couple hours, depending how long the trade goes for, okay? So we all got to start small and compound our way up to that level, okay? And it's all about discipline. It's all about discipline and how you are emotionally disciplined with trading in this industry, okay? In this Forex market, okay? That's something that everybody has to do on their own, is emotionally discipline yourself, hold the trade, don't exit out, just trust in your markup, okay? Everybody went through it. I went through it. The people in our groups went through it, but that's how you become a successful trader, okay? So now I'm going to look into AUD USD real quick, okay? Because I did see a potential setup on AUD USD, and I want to see if it passed already, okay? This, mark this zone right here. Yeah, I was looking right here. So not really liking this one though. Yeah, I'm not really liking this one though. Okay. But with AUD USD, okay, so as you guys can see, all right, see how the market went up, came back 100%, came back here and sold, head and shoulder pattern. All right, same thing here, broke out the top, came back down. Okay, you could even do this right here, right there. Here's your left shoulder, here's your head, here's your right shoulder, sell. If you had a 0.01, right, you're making 10 cents per pip. Well, if you took this down all the way down here, okay, it's 120 pips, so like what, $12 or something like that. I mean, that's what we call compounding. You take that 12 and then you're going to double that. Then you take that 24 and you're going to double that to 48. Okay. You're compounding every single day. That's the goal, is to compound your account. And that's how you're going to get to 6 figures. Okay. So, looking at my time here is 8:51. I wanted to enter into a trade, but I don't want to take up too much time. We have 8 minutes left. If you guys have any questions or comments, please get with the person that brought you into this Zoom. Okay, then they can answer all your questions. And I'm going to turn it back over to T for some more announcements. If you guys got value out of this, please give me a fire on the group chat, and thank you for the Zoom call.